Welcome back, everyone. Michael here with Offshore Citizen. Today we're going to dive into one place that I haven't spent that much time talking about, but is actually quite attractive, or at least easy to plan around for tax purposes. And it happens it's a place that a lot of people like, and it's a place that has some great residency programs. I've talked about it previously, and that is Thailand. So for those of you who are interested in possibly relocating to Thailand, they're introducing a flurry of new visa options, which is great. We've traditionally had basically kind of an employment visa where you'd work at a company that arrange it for you, and kind of you'd basically pay them, and then they would pay you with obviously some small fee. Or the Thai Elite visa. There are some other ones coming up, so that's quite interesting. And it just happens that it's actually really attractive from a tax standpoint. So today I'm going to discuss a little bit of the nuances of the tax rules in Thailand, and hopefully those are helpful for you. If you'd like help with setting up your own international structure, paying the lowest legal amount of tax possible, figuring out where to relocate, etc., please reach out to us. You can book a call, county.com/Michael-Rosmer, link in the description below. We can help you figure out the best solution and also have our team execute for you on forming the companies and opening bank accounts and all that other kinds of stuff. And if you are interested at all, you can also send a message to our websites, offshorecitizen.net or offshorecapitalist.com. Okay, so Thailand, a great place. For those of you who have not been there, it is really diverse. Bangkok is a crazy city. I don't know that I've really been to another city that I would say is quite the same as Bangkok. You can have some of the nicest, most amazing things in the world there. I've done some videos previously on Bangkok versus some other places. And so you've got some really amazing options there next to just like, really smelly slum, not sort of great environments. You've got beautiful beaches in some areas. You've got beautiful mountains. You've got nature, jungle, wildlife, great climbing, etc. So, needless to say, a bunch of people would like to live there, and historically it was quite cheap, although prices have gone up quite a bit over the years. But anyway, still relatively affordable. Now, this brings us to the question about what about tax? So here's the deal. Thailand does not have very low taxes, and it's a fairly bureaucratic country. So generally speaking, you don't want to form a company in Thailand. You don't really want, in a lot of cases, to operate a company from Thailand, although we do have a bunch of clients who employ people in Thailand, etc. Usually what we're talking about is somebody who is going to relocate to Thailand and have their business abroad. And in this, Thailand is exceptionally well suited, okay? So why are they well suited? First of all, kind of before we discuss that, let's just quickly cover off. So you can end up paying in excess of 30% tax in Thailand. Their capital gains rates are not so good. Their taxation of crypto is not that great, etc. So you might say, well, why go there? Well, it's because you could have a foreign company, so they have no management and control rules for companies. This is the first start. So Thailand has this really interesting system where they deem residency in exactly the way you would want them to from a corporate and a personal standpoint. And likewise, they have territoriality in exactly the way you would like them to, meaning that they have territorial tax on individuals, worldwide tax on businesses. And so because of the fact that your business is going to be abroad, and they define a business as being resident if it is registered abroad, so you can go and register a business abroad, Thailand's not going to consider that a Thai company. This is the first thing that is really useful about Thailand. The second thing that's useful about Thailand is there are no CFC rules. So you don't have to worry about that side of things. This leaves us with really, if those of you who are familiar with kind of my framework of looking at what I call the 3 pillars of residency, really only one major area, which is domestic source income. So what some people may say is they'll say, look, if you're sitting there working in Thailand, this could be Thai income. This is true. Technically speaking, that could be the case. You could be deemed as being a permanent establishment for the company. In reality, Thailand, if you rent an office or something, you could have a problem. Okay, so even if you're in a co-working space, you could have a problem. But if you're sitting in your home office working remotely, your clients are abroad, your team is abroad, etc., realistically, you're not going to have any issues with this in Thailand. In fact, Thailand is fairly famous for, let's say you get a Thai Elite visa and you go and you live there and you say, okay, great, I want to file my taxes. They're going to say, why would you want to, if you don't have tax liabilities? So this brings us to the second part. Okay, so what can you do in Thailand? First of all, you can set up a foreign business. You can fairly easily make that business foreign for Thai purposes and not incur Thai taxes on that company. fairly frequently. Not all cases, but fairly frequently. This is a distinct possibility. And then you only just deal with the foreign countries' tax rules, and you can potentially get those down to zero. Okay, so this is often a great way if you want to do various investments, that the investments would normally be taxable in Thailand. You can put them in a foreign company. If you were wanting to have some sort of a global business, you can do that, etc. And if you're interested in figuring out, what works for being in Thailand and your type of business, reach out to us and we can discuss it. Okay, this brings us to the next thing, which is really interesting in Thailand. So as I said, Thailand has kind of a quasi-territorial tax system on individuals. They don't have it actually on businesses, but on individuals they do. And so in this case, if you have capital gains or dividend income, which was earned abroad, okay, so it's foreign income, right? And you do not bring it into Thailand in the year that is earned, it is not taxable. Okay, so if you bring the money into Thailand directly as soon as it's earned, then you're going to be taxable on it. But if you're in a situation where you don't do that, you're not taxable. How wonderful. This is a great capability, because you can come into the country with enough money to fuel yourself for a period of time. You just accumulate that money abroad, and then in the future you can bring it in and do whatever with it. And that's not an issue. So this brings up the question of, what does it mean to bring money into Thailand? There's two key things here. Number one, Thai bank accounts. So what we would always recommend is we would always say, okay, set up a foreign bank account, pay out dividends from the company into the foreign bank account. The money stays there for a year. And then after that year, you can pay it into a Thai bank account or another bank account, or leave it there. But you want to be able to show clear separation. In reality, in Thailand, they're unlikely to look at it. But if they do, I'm always a fan of, let's make sure that it's clean and easy to understand and kind of meets the standards that they're looking for. So that is what you would do. The other way that you could have money brought into Thailand, so you want to avoid this, is if money was spent into Thailand. So the one is bringing it into a Thai bank account, the other is spent in Thailand. So let's say that you wired it from abroad to pay for rent, that you had a credit card attached to that account, and you were doing spending, buying your groceries, paying for suits, paying for whatever in Thailand. That could also be considered bringing the money into Thailand, so you would want to avoid that. So again, the idea is clear separation. So clear separation of the business from Thailand and abroad, then clear separation of the money which has been paid out and is abroad and when it comes in. And if you're willing to do those things, there's a lot of flexibility. Again, not all businesses, so it's always case by case. We always need to take a look and see what are the details of how the company works for you. But this is pretty easy to do for a very wide range of people, and allows you to live in what many people would consider a really attractive country, and do so with potentially zero tax, or at least very low tax. So let me know if you have any questions. Put them in the comments below. Send us an email, send us a message to our website, book a call. I will look forward to seeing you guys on the next video.